Hey, what's happening, guys? Dan Dyro here with another options and play video update. This coming week will be the main event, earnings season. This is the week of the quarter. Huge name after huge name after huge name reporting, and it's such a big week. I figured I'd break up the videos, um, and this will be covering the first half of the week, so through Wednesday morning, and then I'll get the second video together covering the back half of the week. But I figured this way, there's a lot of information. At least we can get this out ahead of the weekend. You can start game planning for the first portion of the week. All right. So before the open on Monday, Activision, $2 is what's priced in, but this is getting bought out by Microsoft, and that's usually a void earnings wise for me. Like somebody that's getting bought out. I mean, I just don't typically expect those to move. I guess it could still move EA or Take Two depending on what they say though, and those two don't report for another few weeks, so maybe they could be a little bit more active. Also, Monday before the open, Coke. So 225 is what's priced in. Definitely, I'd say right now the staples are one of like the last remaining hiding holes because there's been a bunch of like great value plays or commodity plays that have gotten hit lately. Staples haven't pulled back or corrected much. Coke is at a multi-year high. It's not usually an earnings play for me, and I don't think I'm going to be involved here. But I mean, if the numbers are good and the trend holds, might be something to look at after for like continuation of that trend. Also, Pepsi reports after the close on Monday. And it's a pretty similar chart, so really a busy Monday morning for some of the bigger staples. Or busy Monday, and then afternoon is Pepsi. After the close on Wednesday on Monday, in addition to Pepsi, I mean, really only one other name, Whirlpool. It's pricing at about 13 or so. The chart doesn't look great, and it's been a while since it's had a large swing around earnings, but the option pricing is really not too bad. And it might leave some room for a volatility strategy because when I zoom out, you can see it's kind of at an interesting spot technically. Um, it's just, I mean, it's probably not a high conviction idea for me. Before they open on Tuesday, so it's a big industrial morning. 3M priced in about 7 points. I feel like it might be one of the more interesting charts of the group. It's been sideways for about a month. It has room in either direction, right? It's got an unfilled gap above, got room down to its recent low. Um, it was hit after last quarter, it hasn't recovered, and I mean, its option price it isn't ridiculously high, so it might leave some room. GE, so about 5.5 points is what's priced in. Last quarter wasn't great, but the stock hasn't really broken down. Definitely like a tightening wedge type pattern, and it could be the quarter where it resolves that range. Option pricing does seem a little bit higher, but I don't know. I also feel like if I did something with this, it might be more like bear biased, just based off of how like last quarter's lackluster results. Plus, I mean, if it starts to break the low 80s, I mean, it could really start to accelerate to the downside. Raytheon, so about 4.5 points is what's priced in. I mean, it's kind of an interesting name with defense because it's still above 100. The sector hasn't really been an earnings story yet. It seems more like a swing candidate, right? You can see that it's right at the bottom of the trend. We'll see how the numbers are and see if the stock can hold in above 100, though. See if maybe continue to focus on an upside on that one.
Test radio, test radio. Hello, hello.
UPS. So UPS is another big report. 15 points is what's priced in. Last two quarters, been kind of the same story. Stock up huge on earnings and then gives it back over the next couple months, right? Up huge, gives it back. It's at its worst level since October, and it's in a tight lower range. So to me, it seems like it's due for a move. Um, I feel like though it's a tough setup because option pricing is elevated, and I think you need to be directional. I mean, you think you need to be leaning one way or the other. And I don't know if I have enough conviction one way or the other. Sympathy play on this could be FedEx potentially. Lower debit way to play it. It's just I feel like it could move, but at 15 points, I mean, it definitely needs to move a lot for the options, and I'm not sure that I see that, but it could be something to keep an eye on. After the closed on Tuesday, so here comes the heavyweights. So Google and Microsoft, right? So let me draw the chart. Let me get rid of these. So the charts in Google of Google and Microsoft are or were pretty identical up until maybe like the last day or so. So you can see Google's breaking down. Google's pricing about 195. Microsoft is pricing in about 18, right? But you could see just until like the last 2 days, the charts were very, very, very similar. Um, Google's weaker, broke its low, down a bunch today. Um, Both stocks have consistently delivered quarter after quarter, and Google has the stock split coming up. It feels like people are a little bit more optimistic about the Google, even though the stock is getting smacked right now. But I mean, both companies absolutely need to deliver because I mean they're both at the bottom of like long monthly ranges. I mean, Microsoft hasn't taken it out, Google just did, right? So I mean, you can see like these charts definitely are susceptible to the downside if they don't deliver. Um, I mean, it's going to be a huge session for tech. It's going to set the tone into Wednesday. There's going to be a lot of money moving around. I might wait to see now how the numbers look, and then if they're good, maybe hop in for a fast follow up swing trade versus taking options into earnings, just because the action right now is real heavy. So Chipotle is pricing about 110. I mean, those options are the bid-ask spreads are pretty wide. Not a lot of liquidity, and to be honest, like that's the whole story with Chipotle to me. Like most quarters, it's just like options don't have a lot of liquidity, stock doesn't have a lot of liquidity, price to move is typically pretty high. Um, Sometimes it moves, sometimes it doesn't, so it's just not as consistent. It's probably going to be an avoid for me, but if I did do anything, it would be maybe like speculative puts or put spreads, just in case they miss, because high multiple names that miss tend to get punished in this tape. GM, so about $3 was priced in. This and Ford really had a rough patch. GM is down around 40 after trading in, upper 60s beginning of the year. I'm not as interested in GM as I am in Ford because of their upcoming F-150 Lightning debut. But this does report one day before Ford, so it could impact both. Um, it's not a great chart, and I mean, I don't know if I'm going to be in it for an earnings. Probably more of like a swing type name in my book. Visa, so about 11 points is what's priced in. JP Morgan gave some indications of credit card spending, so did American Express today. Visa, it could still have some action of its own, but I mean, it really needs to get above like 227, 28, right? To kind of get through the top end of this chop. And then on the downside, it's got some room. Um, it's just, I feel like it's going to need a strong report to really have a big move versus if it's surprisingly weak. I mean, it could have some room lower. So it's kind of like a lot of names where the risk reward seems a little bit more in favor of the downside, but um, we'll have to see. It'll be a game time decision for me. Before the open on Wednesday, Boeing, it's about 10.5 points is what's expected. It's another industrial transport heavy morning. Boeing always gets a lot of attention. I just personally don't see a whole lot to do with it. Stock has been choppy. Earnings typically aren't huge events, but option pricing tends to be high. It's also usually a lot of volume on the contracts too. It just really seems like a lackluster setup to me. But I guess if you have conviction one way or the other, maybe it's something you look at. I don't think I'm gonna be involved on it. And then lastly, Spotify before the open on Wednesday. So about 16 and a half points is what's priced in. It closed green on earnings 2 quarters ago, so it broke a streak of getting hit pretty consistently on its reports. But then last quarter reverted back to that. So stock acts weak, and it's actually, if I scroll out, I mean, you can see it's all the way back at basically the bottom of its IPO range. So um, I mean, they really need to deliver. I mean, it's at the. I mean, you can see. I mean, it's almost at an all-time low here. So it's more of an interesting pattern this time around because of that. But options just they don't seem to leave a ton of room. So any trade I would put on would probably revolve around getting risk down on it. So that's through Wednesday morning. All right. So I'll do the follow-up video for Wednesday afternoon through Friday on Monday. So be sure to check that out. Okay. So if you like this video and you're looking for more information about trading earnings or events with options, please follow up with the link in the description of the video for more information on options to play. Have a fantastic weekend. Stay well and rest up because this coming week is going to be a busy one. All right. I'll talk to you all on Monday.